Alright, let's talk about Nigeria's anti-money laundering rules. Think of this as your personal guided tour. First, you have the three layers of the legal framework. So think of it like building a house. At the very bottom, your foundation, the big primary laws, the anti-money laundering laws and the Terrorism Prevention Act. Then you have your walls, the sector-specific regulations from the CBN, SEC, and NICOM. And finally, the roof and the finishing touches. That's the national and international standards from organizations like the NFIU and the FATF. All right, so we've got the rules, but who actually enforces them? It's these guys, the regulators. You've got the CBN watching over banks, fintechs, and payment providers. You've got the SEC, who are all about capital markets. You have NICOM that handles everything insurance, and you have the NFIU that acts like a central brain. It takes in all the reports, the STRs and STRs, and then when it's time to act, that's where the EFCC, the enforcement arm, steps in to investigate and prosecute. The bottom line is this: who you are and what you do determines who's watching you. Okay, so now we know the rules, we know the players. Now for the most important part, what do you actually have to do? These are the absolute non-negotiable obligations you have. Now don't just look at it as some boring checklist. Think of it as an elevator. It all kicks off with customer due diligence, KYC and KYB. That initial check helps you set a risk rating. That rating then tells you how closely you need to monitor their transactions. And if your monitoring spots a red flag, then you have to report it. And holding this whole elevator together, you need rock solid record keeping, strong governance with real accountability, and tight data security. Every single piece is connected. Regulators don't care about the paper, they care about the practice. You can have the most beautiful 100-page policy document in the world, but if it's just sitting on a shelf collecting dust, it's worthless. They want to see it working day in and day out. So how do we bridge that gap between paper policies and what actually happens on the ground? Well, let's dig into some of the most common gaps and, more importantly, how to fix those gaps. Gap number one, the classic disconnect between policy and practice. And we've all seen it. The solution here is to just make it real. You have to link every single rule to three things: a person who owns it, a system control that actually enforces it, and a report that proves it's being done. No more gray areas. This creates a chain of accountability that you can actually demonstrate. Gap number two, fragmented tools. You're screening over here, monitoring over there, and reporting in some other system. When these things don't talk to each other, you create massive blind spots, and that's extremely dangerous. The solution is to centralize. Bring it all into one platform for case management. That gives you one single source of truth and a clean, solid audit trail that will make your regulators happy. Gap number three, weak or static risk ratings. You can't just score a customer when they join and then forget about it. It's not supposed to be a snapshot, it's a moving picture. You need to make your risk ratings dynamic. Tie them to actual behavioral triggers so that when a customer's activity changes, their risk scores should change too. Your system has to be alive as the risk itself. Gap number four, the reporting scramble. You know the feeling. An alert goes off and everyone's rushing to file off an STR. Documentation is messy, and that's a huge red flag for an auditor. The fix here is simple but incredibly powerful. Just standardize everything. Create templates, use checklists, make sure every report is timely, consistent, and totally audit proof. You're not just filing a report, you are building a defensible process. So okay, we've gone through a lot in this video. So let's boil this down to a few practical takeaways. Here are four things you can literally start doing today to make your compliance program stronger. Number one, map your obligations to your specific license. Don't try to boil the ocean. Focus on the rules that actually apply to you. Number two, document every single process. The auditor's motto is, if it's not written down, it didn't happen. Number three, keep your eye on regulatory changes and advisories. These are telling you what new red flags to look out for. Number four, train your people and refresh that training constantly. So many compliance failures boil down to a simple lack of training. And it really all comes back to this. A clear understanding of the regulatory universe is the foundation for effective compliance. You just can't follow the rules if you don't know the rules or who's making them. Getting that clear picture is step zero. It's the foundation for everything. So I'll leave you with just one question to think about when you look at your own program. is it really built on practice or is it just built on paper? Thanks for watching.